Hi, this is Dan Collins, coming to you live from Traders Expo New York. Joining me is Mark Guthner from theoptionsedge.com. Mark is also a professor at Rutgers University.
Yeah, it's pretty exciting stuff.
Yeah, well, and well, it's tournament time. So
yeah, absolutely.
I don't know if Rutgers on pace, but what we want to talk about today is kind of the return of volatility, in 2018 and where we're at now, because it kind of got depressed again after the market rebounded from the Q4 weakness.
Yeah, well, volatility is very market directional, so when markets fall, people get scared and volatility rises, and it's reflected in option prices. And then as markets recover, people calm down a little bit, option premiums come down, implied volatility comes down. But it's certainly a very interesting time right now.
Yeah, and explain to that, because options are interesting tool always, but volatility is kind of a subtext that you have to understand where that is before you kind of move forward with your trades.
Well, that's right. I look at volatility for the overall market on a daily basis, and that's giving me a little idea of how much fear people might have in the economy or in their investments, more broadly. So, it's a really interesting time because there's so much intervention in the marketplace right now. The Fed was very heavy with quantitative easing in the last, 5-10 years, and that really suppressed volatility, and I think that's made everybody a little bit complacent, and they're thinking that implied volatilities of 10, 11, 12 are normal, and they, of course, are not. And now that we're kind of getting back into higher numbers, people are a little bit concerned, but I think these are more normal numbers, and I wouldn't be surprised to see volatility going higher.
Yeah, well, defining what is normal is kind of a dangerous game.
Oh,
because things kind of, as the experts say, the markets can stay irrational longer than you can say liquid.
That's right. So you got to stay on your toes, and from our standpoint and the way we look at this in the marketplace and how we generate ideas is, we're looking at both fundamental and valuation of individual companies and the technicals. So we tend to be trend followers, but we want to time our transactions, when at the bottom end of trend channels, or when maybe there's a little bad news in a stock, kind of setting it up for the next slingshot, move higher.
Okay. Who's visiting the Options Edge?
Well, our customer base are the self-directed investor who knows a little bit about options and wants to learn more. So we published a book by the same name, The Options Edge, where Michael Coe and I talk about all these ideas that we presented to institutional clients. And so what we did is we kind of brought it back a little bit, make it very accessible to the regular guy that wants to trade his own account and make a little extra money. So we kind of focus for that level of sophistication. Somebody that's not a novice, but somebody's not a super duper expert. We're kind of right in that middle spot, and that's who the people that follow us and read our material.
Okay, because options can be a double-edged sword. You can be more precise, and it could be used to make safer trades, but without a lot of knowledge, they can be kind of a dangerous tool as well, can't they?
Well, that's right, and I think before people start trading options, they should have a certain level of understanding of how they work, and so if you paper traded, that might help, but options are much more volatile than the underlying stock, and you need to be able to stomach that volatility, if you will, to be successful over the long term.
Yeah, and like all trading, you need to do your own due diligence. You need to do your own research before you're putting your own money at risk.
Well, that's right. And so when we talk about ideas with our clients, we put our analysis out there, but we want them to take that next step and verify the things that we say. If they know something about the industry that we talk about, to make sure that's consistent with what they know and believe, and then make their decisions accordingly. And at the same time, we might have an idea out there that makes sense, but it's got to make sense for the client, and it's got to make sense for their portfolio. So, for example, if they're long a bunch of oil and gas stocks and we have an oil and gas idea, we don't necessarily want them to go add that to their portfolio. They're already exposed. So, people, it's very much about the education of how people can take control of their own money.
Okay, and that's the Options Edge. We're going to take a quick break, but we'll be back in a few moments at Traders Expo New York.